Now, we want to help you, not just Matt, to navigate you and your money, navigate 2025. And that's where Paul comes in, the president and founder of Heritage Capital, LLC. Every year, Paul, I know you love this. You must get that a lot, though. People, it's like a doctor. Hey, can you look at this?
I'm going to poach Matt away. We're going to hire him.
Are you?
Yeah.
Okay.
Matt, hopefully, Matt, you hear this.
Well, remember, weather predictions, you don't have to be right 100% of the time.
Neither in my business either. You don't have to be right all the time.
That was my segue. You do a fearless forecast every year.
Yes,
you
sir.
make it a point to say, I put my predictions out there, right or wrong. I stand by them.
That's right.
So let's talk about the predictions for this year.
So unlike to the last 2 years, I sat here in January and I said, huge year for the stock market, epic returns, get on board, have fun.
Yeah.
This is probably I'm not concerned, but it's as concerned as I've been since the beginning of 2022. I don't think this is a big down year. Full stop. Not a big down year. However, this is not 2017 when Trump came into office the first time, where markets had done nothing for 2 years and we had an enormous tax cut and enormous deregulation. This year, we've had 2 huge years. We've borrowed from 2024 for 2025. There's not going to be a huge tax cut, so the consumer's not getting a lot of relief. Deregulation will help, but these deportations and I think some other things in the policies may not be the tariffs, more bark than bite, but they'll each will be like a little nick at paper cut. So I think the year for stocks can feel worse than it is. We're up mid-single digits.
Mid-single digits. So we will see what happens by the end of 2025. But there's a lot of people who are sort of waiting for the bottom to drop out ever since the pandemic, and it hasn't happened yet. So do you think a lot of people are going to go with your advice because it's just they've been preparing emotionally for it?
So listen, capitalism has booms and busts.
Yes.
Right. 2022 is the worst combined year for stocks and bonds in history. So, and on top of the pandemic, 2 years before that. So it's like fresh in people's minds. It's called recency bias.
Yes.
But look, this year, economy is still pretty good. The labor market's still pretty good. Interest rates, not so much. Things, again, I think we're going to have at least one double-digit decline during the year that lasts 7 to 9 weeks.
Okay.
Right? I think that's coming. That because we're due and it's healthy. We didn't have one really last year, the year before. It's not. I don't think it's 20%. I think it's 10 to 12, 14%. Things will be fine. It'll feel worse.
I remember the Fed's inflation goal, 2%. You had said a long time ago that you think 3% is a new normal. It looks like that's right where we are. What about mortgage rates? What is going to be the new normal for that for people who are looking to buy a house?
So there's a lot there. So number one, I do think second half of the year, the economy slows, inflation slows. We get back towards 2%, which is better.
Yeah.
But economy slows. I'm already seeing layoffs. My wife's an HR consultant, and she's already seeing her clients begin to lay off people on the small end. That eventually goes down to the big end in 2026. Mortgage rates, the only way to fix the housing market. So everyone's how do we eventually fix it? One way. And that is, unfortunately, you're going to need a recession at some point to hit the reset button. Mortgage rates, people, they're depending on what rate, they're 7, 8%. That's because it's a function of interest rates in the market. That rates will go down once the economy slows. When we have recession, rates will collapse.
Yes.
And that will be good for mortgage rates. Unfortunately, with that, housing prices will go down. I don't think it's a 2025 story.
What about trying to make more inventory? Obviously, that's not an easy fix, and especially if something's going to happen that's part of a natural boom and bust cycle anyway.
It's the same thing in energy. When we realize we don't have enough supply, we want to start drilling. Trump's drill, baby, drill. Those are stories for years down the road. More housing supply, more energy.
Yeah.
That's how you get prices down, by increasing supply. It's not a 2025, and it's probably not a 2026 story for supply either.
There you go. All right, let's talk about general investment advice. People with 401ks, college funds. How do they take everything you're talking about and synthesize it?
So I say this all the time, and I get a couple of emails that ask about it. For your 401k, you picked an allocation. You're a 50-50. You're 50% stocks. You're 50% bonds. Right? When the stock market goes up 50% in 2 years, your percentage to stocks and bonds goes like this. So you should do, at a bare minimum, an annual rebalance. I prefer quarterly. I like when people do it quarterly. But at a bare minimum, bring your allocation back into 50-50 or whatever your personal allocation is. And people, don't be afraid when stocks go down. Add a little bit of risk. when stocks are down 10% plus, and when they rip higher again, if they rip higher again, there's nothing wrong with harvesting some acorns for a tough winter like we're having now.
So still buy low, sell high if you can. But there's that old saying, time in the market beats timing the market. And if you're right and there's a slowdown coming, what should you do with X amount of dollars right now? Get it in now or try to wait 4 or 6 months?
It depends on your time horizon. If you have a really long-term time horizon, I tell people, just feed money in on a weekly or monthly or whatever. If you get a down 10% period, you feed a lot in if you have it.
Okay.
So regarding the downturn in the economy, until you really get some data that supports that, that's a forecast that I base nothing where I manage our portfolios on. That's a 2026 kind of thesis thinking theory right now.
Got it.
I wouldn't worry about that. I would find things. Would I hop on, the quantum computing, which is all the rage now? I would not. I think people, it's going to be really volatile. There's a bust coming there, but there's plenty of other areas of the market that still look reasonably priced. I mean, tech is expensive. Tech's always expensive. Would I hop on the
But it's
Super
blue chip.
Six?
You can count on it to go up long term.
You can, but look, Apple's been crushed lately. I mean, did anything really change in Apple's fundamentals in the last month? It hasn't. So would I look at Apple now? Sure. Would I run into some of the Broadcom's, Marvell, Nvidia semiconductors right now? It'd be a tougher thing for me because they're up. I don't want to buy things that have melted up already, and people shouldn't either. People should be careful chasing in any market, let alone one that's had a back-to-back great years.
Yeah, listen, I just try to keep it very, very simple, and that's what I wanted to pin on. You're not changing your strategies based on this forecast. You are still doing what you do. And
I think folks who have been waiting for bond yields to go higher, interest rates to go higher, you're in that kind of situation right now. You're going to get a 10-year Treasury bond, that 10-year guaranteed bond by the U.S. government, full faith and credit of the U.S. government. If and when that gets above 5%, I think that's where concerned people should take action.
Yeah.
I think second half of the year, bonds rally, people are happy with that. Rates come down a little bit. My one thing I'd say is I do see some kind of crypto crash during the year. It could be 30 or 40 or 50%, some big number that shocks the system in crypto.
Okay. But then again, if you're getting into crypto, I got to imagine you're buying in knowing that's a possibility because it's so volatile. Anyway.
I wouldn't. I mean, listen, plenty of people ask all the time, I would not run into something like Bitcoin over $100,000. 2 years ago, I sat here, it was $14,500. I said, it's got at least a double or triple coming. Now it happened. I wouldn't jump in at $100,000. That's crazy.
Yeah. Okay, there you go. Don't jump in if you've got $100,000 to spend on a Bitcoin. Matt's already going for his stock tip, so we're just going to.
Oh, thank you, sir.
Resume.
We'll be interviewing you later.
All right, Paul Schatz from Heritage Capital. Thank you so much for throwing a lot at us.